An account receivable is an amount owed by a customer who has purchased the company's product or service and can be referred to as debtors or trade receivables. Businesses need to analyse their accounts receivable to provide information to their stakeholders about how effectively and efficiently they are managing them. The three main ways of analysing receivables is through a horizontal and vertical analysis, the receivables turnover ratio, and the allowance ratio. Information to formulate an analysis is drawn from the statement of financial position, the statement of profit and loss, and the notes to the accounts. A horizontal analysis calculates the percentage change in an account balance over a period of time. It is formulated by calculating the dollar change in the account balance, which is then divided by the prior year balance. A vertical analysis, on the other hand, compares an account balance within 1 year by dividing each balance by a base account. This is an extract from Woolworths' balance sheet published in their annual financial report. Given this information, we are able to conduct a horizontal and vertical analysis on their receivables balance. The receivables turnover ratio is a comparison of a company's credit sales to its receivables and indicates how many times during a period a company generates and collects receivables. It is calculated by dividing credit sales over the average receivables. It can be quite difficult to calculate this ratio as sales made on credit are unknown. Thus, if we assume all operating revenue was on credit, we can calculate an approximate ratio for the company Rio Tinto. This ratio can be challenging to interpret, and so it can be converted into the days in receivables ratio. This ratio divides the receivables turnover ratio into 365 days. The days in receivables ratio for Rio Tinto indicates that it takes them around 140 days between selling the good and collecting the receivable. The allowance ratio compares the allowance account for doubtful debts to accounts receivable and measures the percentage of receivables that are expected to be uncollectible in the future. Companies want this ratio to be as low as possible, as a high ratio indicates that there are more receivables that are uncollectible. There has been a decrease in CSL's ratio by 0.45%, which indicates an improvement in the receivables collected.